The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful October 21st at the headquarters of Technical Trading and Investing, TFNN.com. And just a gorgeous day down in Clearwater, Florida. It is sunny and beautiful. Today in 1938, the first photographic image of a person is recorded. It was otherwise known then as a daguerreotype. I think it was a French gentleman, took a picture of a Paris city. I think it was France. And it was back then, it was a silver exposure on a piece of glass. And it took 10 minutes to have the full exposure. So people walking around on the streets, none of them actually showed up. There was a man getting his shoes shine. And they stayed there almost all the 10 minutes. And he was the first gentleman ever recorded on film. Of course, if you belonged to the Indian tribes, they stole his soul. I don't believe that. But he was the only one that's sitting there long enough. They got that down to fractions of several seconds. In the next 50 years, but it went to film instead of glass. But the original film was known as a daguerreotype, and kind of hard to think that in 1938 was the first image of any human that was recorded. It wasn't just a painting. But in 1938, we're hardly 200 years into actually taking photographs. But even then, it took 10 minutes to take it. I have a feeling that people with their smartphones probably feeling just a little superior and doing the superior dance. See what else we have going on in the world. Yeah. I've seen that picture too, or pictures like it. Somebody in the den is talking about a picture of Central Station in New York. But now, of course, you can take pictures, and the biggest thing out there is super high-speed cameras that were only available to the most intrepid of scientific organizations are now commonly available to the person at home. In fact, I was watching some video on YouTube, strangely enough, and this guy was taking pictures of a airsoft gun. These are the ones that shoot the little tiny plastic pellets, and they also had landmines. I didn't know about that. The landmines shoot water or flour all over you, so when you're playing Army, you can get it. But very interesting to see this bootstrap video out there of 10,000 frame per second video, and just very interesting to see. But anyway, I digress. Of course, this is the show that's won many awards for digressing, so we'll go on. I had a couple of questions about something I said last week that I can't even remember. But I got several questions about why there's so little gold. I think it had something to do with elements that we were talking about. And actually, I have a little something here for those folks.
There's antimony, arsenic, aluminum, selenium, and hydrogen, and oxygen, and nitrogen, and rhenium, and nickel, neodymium, neptunium, germanium, and iron, americium, ruthenium, uranium, europium, zirconium, lutetium, vanadium, and lanthanum, and osmium, and astatine, and radium, and gold, protactinium, and indium, and gallium, and iodine, and thorium, and thulium, and thallium.
Well, we've probably had enough of that, but the important part is that there are a lot of chemicals out there, and the question was, why is there so little gold? And it's a kind of a long answer, but I'm going to try to get through it fairly quickly. Pretty much all the elements are made in what are known as red giant stars. These stars are about 200 to 400 times the size of our current star. And as the hydrogen is slowly fissioned out in these giant stars, it slowly starts trying to fission the helium in it. And at that point, you start seeing the end of the star die. It's a giant war between gravity and gases that are heated to 15 million degrees. And of course, they want to expand because gases that are heated expand. So you have this kind of war going on, and slowly the hydrogen in the star burns away and tries to actually get to the helium and fuse it. And there is a spot where you'll get as that continues to happen, you get a lot of side products, and those are carbon and oxygen. And the longer this thing burns, the more these more rare elements become available. You actually get to the point where about 2 seconds before the star blows up, you actually start seeing the heavier elements actually created. So pretty much all the gold and things like silver and a lot of the heavy metals that we see are in the last blink of an eye before the red giant explodes into a supernova. And this basically happens by the inside of it and the outside, which is kind of a gas. The inside's getting a smaller and smaller, denser core. In the last brief instant and beat of an eye, the inside of the core expands to the outside of the sun. The inside comes in, collapses, and blows everything out in the most violent explosion that will ever happen in the galaxy. And of course, now all these heavier items that were made in the last 2 or 3 seconds of the sun's life or the star's life are all on the outside, and they get blown out. But of course, it has little to do with anything other than the fact that it takes longer and longer at the very end of a star's life to make heavier and heavier or heavier items like gold, uranium. All those things are made in the last brief instant of time. And why there isn't anywhere close to the amount of gold there is as iron or carbon and oxygen, selenium, and I can go through the rest of them. But when we trade gold out here, we are trading one of the rarest elements because it's made in the briefest amount of time just before a star ends up blowing itself up into a supernova. And of course, eventually all the hydrogen will be fused into a direct pure energy, and the stars will all go cold, and the solar system, the universe will all go cold, and that will be it. That's about 4 trillion years from the beginning of the solar system. So many people in physics say we're living in the golden age of the universe, and that is when it before all the lights are out and the party is over. But I digress again. I have to win all those digressing awards. We are seeing the president come out today, and we see that basically the Affordable Care Act, the website for, is pretty much broken. We've talked about the reasons why, but mostly the money was given away in a patronage scheme, mostly probably to get lots of money back into the coffer of the politicians that gave it away. Nothing new there, the Chicago way. But we have basically a website that's unusable, and no one's actually successfully gone through and through the website and finished signing up. But a lot of people have done it manually. But to actually fix it, there's about 500 million lines of code, and of course about 50 million lines of that has to be totally rewritten. One thing as a programmer that I know, that is that if it took, let's say, a man-year to write whatever lines of code, to go back and fix it is going to take 10 man-years of code. Normally, if you don't do it right to begin with, it's normally a 10-to-1 penalty for doing so. And the old saying in software development is the first 90% of the software takes 90% of the time. The last 10% takes another 90%. The question is whether or not we can make any money off this. And I saw, very interestingly enough, coming back from the dog park and actually talking about this, down here in Florida, there are several of these urgent care centers is normally what they're talked about. And the lines were out the door in these places. Basically, I stopped on the way in to the grocery store, which is right next to it, and asked a few people. And they said that they were calling 5 to 10 people to actually try to get a appointment with somebody for whatever their issue was, and they finally gave up and spent the $75 to go to these places that have nothing to do with the government and can walk right in. If anybody knows anything about that, give me a call at 877-927-6648. Is there a public company that's really invested in these non-government type of healthcare systems? If you really need something that isn't the equivalent of a emergency care emergency room visit, but you want to actually get seen and not wait for 2 weeks. But maybe this is just a Florida thing. But I talked to enough people this weekend. It seems like this is more than just apocryphal. And maybe there is a company out there that is going to blaze the trail if you don't want to wait the customary amount of time that you would in Canada or England, or all the other places that have adopted the kind of healthcare that we are headed to. But maybe someone knows something about it. Anyway, there's 3 reasons why the healthcare system's probably going to break, and it's unclear whether or not there's the political will to fix it before it does. Probably the biggest thing is that the buyer's remorse. Everybody was told that you would be able to keep your current health care. Over the last few weeks, about 14 million Americans are going to be getting notices that their existing health care insurance policies are going to be canceled effectively December 1st. The individual mandate will become problematic. The individual mandate is essential to the functioning of the insurance markets under the Affordable Care Act. And if you can't buy it, how can you go back and go under it? And the question is whether or not they will actually have this, all the parts of the website fixed. Now, the Act itself was 2,750 pages or something. The actual rules are somewhere around 11 or 12,000 pages. This makes it incredibly hard for someone writing software to actually understand all of the moving pieces out there. The question is whether or not they can go back and fix the 50 million lines of code out of the 550 million lines of code that's just on the website, much less all the stuff that backs up the rest of it. And lastly, there is a possibility of an insurance death spiral. And that is less and less people opt in, and probably the most sick do.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, not to belabor the point, but my question is, maybe somebody's out there in the audience that understands the companies in health care that are going to stay away from Medicare and some of these others. And just from the line out the door on Saturday, I'm thinking these guys are doing a land office business. Now, maybe it's something very particular to Florida or even particular to Tampa. But maybe, it's one of these things I don't know enough about healthcare and how it works. But to me, I've been going by this place for a couple of years, and to see the lines that I've had over the last couple of months, I'm thinking that these guys are doing pretty good. Now, basically, you pay about $75. You get to go in and see a doctor. They give you a script, and you can get out of there. But you don't have to call a doctor. And it looked like they were running people in and out of there fairly quickly. $75, maybe if you don't have to deal with the government and wait for 3 months to get your money back, these may be the new gold mines of the coming years, especially when you can all say that you would like health care for everybody. The answer is, can you really make a life insurance policy to go after those people that are 72 years old and make any money? And the answer is no. You can't insure life expectancy at 72 years old. And unfortunately, the people that are sick will get on this program. And, of course, the people that get sick will, since you can't exclude existing illnesses. And the question is just how are you going to get around that? I don't have a good answer from anybody on that. And, of course, the thought is more and more people will opt out. And it's called, well, at least people are calling it the insurance death spiral. But if you have anybody that knows anything about this, maybe we can find out and find a way to make money. There's always opportunity everywhere. And in confusion, there is profit. And I think there's going to be a lot of confusion on this for months, if not years to come. We are going to have a ton of IPOs again this week, starting with Areri Pharmaceuticals. Symbol is going to be AERI. It's a clinical stage of biotech and developing treatments for glaucoma. Plans to raise $68 million. No big deal. CommScope, COMM, which provides connectivity solutions for wireless, enterprise, and broadband networks, plans to raise $750 million by offering 38.5 million shares at a price range of 18 to 21. Endurance International Group Holdings provides web hosting, domain services, and other cloud solutions. Plans to raise $351 million. It's going to be EIGI. Global Defense and National Security Systems is a blank check company focused on acquiring businesses in the government, defense, and security space. NSA. And Sprague Resources LP, SRLP, is a limited partnership. Remember that. That LP business is purchases, stores, distributes, and sells refined petroleum products. Plans to raise $170 million by offering 8.5 million shares at a price range of 19 to 21 bucks. Well, if Andy's right about us hitting the highs in the market for crude, these are the kind of companies that are going to go to hell in a handbasket fairly quickly. Be interesting to see how this one goes out the door. After the bell tonight, we are going to be seeing Netflix comes out with earnings. It was up pretty strong already in the pre-market and during trading today. They are saying it will earn 48 cents a share on the $1.1 billion in revenue for the quarter ending in September. And basically, it's going to earn 13 cents a share on sales of $905 million for the last quarter. The talking heads are saying Netflix has lightly overtaken HBO in paid U.S. subscribers, analysts say, but this is a company that might as well be China when we try to come and find out any facts about how much money they're spending, where it's going, and everything else. This is, by all reports, a company that is a Rorschach test for anybody that looks at it. You don't know how much money they are spending. You don't know how much money they're going to spend when the Disney and some of these other contracts come along. And the idea is that they can just expand large enough to fix all of their woes. Now, my question isn't whether or not it's a decent company. I use it. Netflix streaming, very nice. The question is, can they run it at a price and make money? Of course, when they were doing DVDs, it cost them about 70 cents to or 80 cents to send them back and forth. Maybe we're upwards of $1. It takes them about a nickel to stream what they have. But of course, it went from 16 bucks to 8 bucks. Anyway, we'll talk a little bit more about this and some of the stocks coming out with earnings this week.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're talking about Netflix, and I've been waiting for this thing to come out for earnings for a while. What I would love to see, NFLX, is the last gap of a 3-gap play. You actually have to go back 2 years, probably a good chart to go back and look at. There have been 2 major gaps and kind of rather minor one out here that is actually a 2-gap around $300. But I'm expecting 2 gaps that happen on heavy volume. This last gap I'm looking for on lighter volume to finish a 3-gap play. The first gap that I'm talking about is on the 24th of January. This thing popped up, the day before out here. On the 23rd, it closed at 103.26. Next day, it pops up and closes, even the low of the day is 139. So you had a huge move there. You go back on to 422. So what is that, April 22nd of this year? This thing closes out at 174 and opens up at 215 the next day. And, we could get a nice gap. I was hoping that this thing would probably tool around 300 and then get up and open a nice big gap. It looks to me like this thing could gap to 400 in the morning. And at that point, if this thing has very little volume compared to the previous gaps, the first gap out here had almost 17 million shares. The second gap we come in almost the same. Is that right? First gap, is that right? 17. Yeah, 20. Oh, excuse me, it's 27 million shares. The second gap high out here was 16.4 million shares. So if we could see something like a nice gap up on, I don't know, maybe 390 or something, this thing opens up, and you get about 10 million shares, that would be the last sign of the three-gap play. The way that these things work out normally is they come back and in about a third of the time or a fourth of the time come back and fill all those same gaps. So if we're talking about the beginning of the year, we're into October, figure 3 months maybe, you could see all of these come back and fill. And it is a pattern, not a certitude, but this may be the biggest three-gap play setup. And if it pops up, going to be extremely interesting in this marketplace. What else do we have on news out here? Existing home sales came out today. It fell 1.9% in September to an annualized rate of 5.29 million shares. Apple, tomorrow on the headlines, Apple has been slowly moving up. And what is it? 521.43. It is above its previous resistance level at 515. Let's take a look. I'm trying to remember what the volume was last time we were up here with Apple. What did we get? The high on that day was 513.74. And see if we can. There we go. We needed 18 million shares. We're breaking it right now with 10. And what do we got? 2.5 hours to go. We're off 2.5 points on the S&P cash with 2 million shares. This would be very interesting to see this thing come back and close below that 513.74. When you look at this thing, especially on the power law vector indicator number, this thing so far, this move has not been with increased energy from the last move from 388 to 513. From 447, the September 16th low, we're getting probably fairly long in the tooth in this move. And just a one-to-one expansion would give us what out here? See if I can find it. It's 388. Okay. That would give us 572. Yeah, 572.09 would be the one-to-one. But right now, we're going to have to see a lot more come in. Now, tomorrow at 1 o'clock Eastern Time, the rollout of their new iPads come out. They're saying that they have a Retina display in the new iPad Mini. The question is, I suspect that that unless the specs have come out much differently, we already see a lot of tablets out there with much higher resolution than the Retina displays from Apple. Apple has exceeded in coming up with better software as of late. Its hardware continues to fall behind that of Samsung and most of the Asian manufacturers. Of course, Apple doesn't build any of its own hardware. It has to buy it from someone else. And most of the time that is Samsung. Samsung has already built higher resolution displays than the existing Retina. And again, Apple's very big on not telling you anything what it is. They like to give it big flashy names. As a software engineer, of course, I like to know exactly what those specs mean. If they call it the big horsepower motor and won't tell you how much horsepower it is, my guess is that it's a lot more marketing effort than actual reality. But we are breaking hard above that high. Anything less than 18 million shares is a failure on volume today. But we have more stocks testing highs on lighter volume than any time in the last 2 years. So we have a market that is and possibly fractured. We are going through options expiration rollover today and tomorrow, so I wouldn't probably be making any big decisions on a market direction for the indexes until we see some kind of close through tomorrow. But I think on individual stocks, everything looks like we're going to have more blowouts, probably like Google, at least on a handful of stocks with high short interest. I suspect that Netflix has some fairly decent short interest over the last couple of days going into earnings. But we'll have to see after the bell tonight. And we'll be hearing that called by Tom O'Brien live on his show at 4 o'clock. Again, you can give me a call at 877-927-6648. That's 877-927-6648. Let's see what else we have. Caesars Entertainment is pulling out of a $1 billion casino joint venture in Boston. And one of its subsidiaries was subject to a federal grand jury investigation into money laundering. The company that probably should be investigated is Caesars Entertainment. I like the actual location. The problem has been since this thing has IPO'd, I've talked about sliver deals, and those were only a very fractional part of the float is pushed out. Caesars took that and probably should have been tossed off of any stock exchange because normally when I talk about sliver deals, the worst ones are 15 to 20% of the shares outstanding actually are let out when the stock goes on the market, and those are the bad ones. In Caesars' case, it was 98% of the shares were untradeable. The thing was trading at 10,000 shares or 20,000 shares a day. They got it up to here to this level. If there is a bigger scam running, I don't know about it on the stock exchange. And my guess is they were going to get it up there and slowly dole out shares to unsuspecting dolts. And eventually this is the amount of shares that are going to come out. Everything that I hear says that this is worth maybe $4 or $5 a share. So we're probably looking at a company in excess of 3 or 4 times its value. And, of course, took a big hit today. But be very wary. This is, as far as the company, of course, they want your money if you come in and gamble it. But not only that, but if you go to the stock exchange, I suspect that they have the same idea, and that is that your money is our money. Just a big one to be watching out there for today. Tesla was out today and a little bit down, about 5%. The reason why is a German stock, I don't know if it's really a stock magazine. Germany's Manager magazine argues that the the car maker may face more challenges expanding into the European market than previously thought. And I think everybody knew that. It was beyond me that they could wave a magic wand and become the first .com car company. You need people to service parts and all of that stuff, and building the infrastructure is horribly expensive. Doing it without anybody as a partner means that you have to foot the entire bill. But I think it's only a matter of time before we find Tesla finding its true value. Of course, right now they would have to sell somewhere around 350,000 cars a year. If they continue to grow at the current rate that they're going, that would take about somewhere between 7 and 10 years, depending on how optimistic you want to get. So you are paying right now at the current price that at least a minimum of 7 years of growth just to break even. The question is whether or not they've got something so special that no one else can duplicate it. And it's been almost impossible in the car business to see that happen. I don't think that they have anything magic that someone else hasn't. Looking at their patents, they have probably made the best battery management software, but probably since they are the equivalent of a probably the Spanish burning their ships when they got to South America. You were going to either sink or swim. Probably they decided to swim. So probably still the best in the industry. The question is whether and how long that can last, especially as they have to use huge amounts of money to actually support a worldwide system of managing and paying off people and getting dealers and all the other stuff that the traditional car companies have. My guess is that it won't be, but down fairly decent. We're off 2.5 points, 2.1 billion shares. So again, a very light volume share day out here. I suspect that we could see some kind of one-day spike on the markets. But we'll see. Still in the news, David Pogue, of course, a couple of guys that are the big hitters when it comes to technology reviews in New York. The downside is, one, they all live in New York, and two, they're all Apple heads, so you really don't ever get a clear review. David Pogue has been out savaging people for probably the last 4 to 8 weeks. And he normally doesn't do that. Same thing with Walt Mossberger. What we find out is both of these guys are leaving their newspapers and starting something on their own. And I suspect that there was probably something like this from Apple, and that is, hey, you guys are leaving, and we've heard rumors. If you ever want access to our stuff in the future, we'd better get a little favor from you. And if you think this is far-fetched, I used to buy advertising in trade magazines, and it was always unspoken. Our products were pretty good, but I'll guarantee you if they were horrible, we still wouldn't have gotten a bad review. We were buying full-page advertising, sometimes 2 or 3 pages in a magazine, and there was no way that the business guys were going to let the editors savage our product or anybody else that was willing to spend that money. I think that both of these guys know how they are paid, and it's going to be interesting now as both of these guys leave the big newspapers who will no longer pay them. But if they're going to have that same kind of ability to move markets based on their recommendation, kind of the thumbs up or thumbs down guys, but be interesting. Anyway, that's it. I'm going to go to some of these other stocks. Again, I'm going to be watching how Apple does tomorrow. Again, their rollout is somewhere around 1 o'clock Eastern time. I think probably everything is out on their new tablets. But everybody, especially the Apple community, in a big hurry to see how quick they can get new hardware out. Mostly because the weakest part of Apple are their tablet business at the moment. And I think when we look at companies like Amazon coming out with at Christmas for tablets for $140 for the Kindle Fire HD, awful hard to start saying everybody should be spending $350 to $500 for a tablet. Maybe you do, maybe you don't. Maybe they've got something hidden, one more thing up their sleeve, but kind of hard to see. Wanted to check in with IBM and see how it's doing since it failed last week. We are probably starting to see more and more of these companies come in, and what we want to see is this volume and probably come down to $170 before this thing bounces. Off a little bit, but not much movement out here yet. What we're going to get is probably a bounce at 170, and it's going to tell us a lot. Give me a call, 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we had a question in the den. When is Twitter coming out for its IPO? And that is November 14th. That is a Thursday, the week before Thanksgiving, I believe. And we'll see how it works out. Anyway, wanted to look at gold out here. There's one thing that's kind of troubling me. I wanted to see, we've had that huge move, and we've had 2 days that are sideways. Normally, you get these kind of moves. You'd like to see, some kind of continuation sign of strength. When we had the IBD guy on TFNN, he always talked about saying 3 or 4 days of strength after a big move. We've gone back into this huge candle of the 18th of September. That huge day had 24.8 million shares on the GLD. We're up in there, and of course, none of the volumes have really come. Could we get back up to 132, which is the bottom of the gap that started on September 9th? The answer is probably yes. The question I would have is if we're going to get anything over that, and the answer looks right now no. Maybe we're in the lower consolidation, or excuse me, a higher consolidation range. But the high volume low still at 114.68 is sitting out here with 32 million shares, and just the overwhelming average is that high volume lows get tested before they are over. Now, you can make a case that it didn't happen on the futures, but I don't know. I have a feeling it's much more out here, and a lot more people playing GLD than playing the futures in cash. But probably a good amount of either way. But, we've got a nice little pop out here. We've gotten to previous congestion area that happened pretty much the first week of October. And what you would want to see is, of course, some kind of continuation move over the next couple of days, and a volume to come in that is along that day of the 18th of September. And we're going to have to see that here fairly quickly, or probably face a opportunity to at least come back down to the 121.85. And if you probably hit that, my guess is we go back to the 114.68 lows that we saw June 28th. So it will be interesting. We got a couple of minutes left. I want to look at some other stuff. Silver rose 36 cents to $22.28 an ounce on COMEX. December copper settled unchanged at $3.30. This thing certainly should have taken off. When I look through most of the charts this weekend, probably the weakest markets we are seeing are in the materials stocks, minus gold. And I'm wondering just how much that puts everything together. Also seeing a lot of stocks in the community of energy testing highs on very light volume. And we'll have to see how those play out, see if there's anything else I wanted to look at here. SAP, which is the competitor to IBM in Europe, certainly interesting. Let's get off that and go to something a little taller. This thing bounced up huge energy, not holding its previous high, but certainly went after the August 26th high that had 700,000 shares, 2.9 million shares today, and can't hold that high. There's a few others out here that are making very interesting chart patterns. Probably the other big news of the day, we're seeing a consolidation in the cell phone tower business. Crown Castle International owns a lot of these. They're buying a lot of AT&T's cell phone towers today. This thing got fairly close up to a previous high, but we're looking at probably AT&T getting a little cash ready to go. Anyway, keep an eye on Netflix after the bell tonight. We'll see you tomorrow, same bat channel, same bat time.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. At Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.